I personally never went to my graduation ceremony, so I made it a point that I do get one graduation ceremony at least in my life. So I use this opportunity. So welcome all. It's going to be sharp, straight to the point. No stories also right now. Uh, I think about 154 people have graduated out of 3 cohorts. And in the last week and a half, when my team and I we did a quick back of the hand calculations, you folks have just crossed about 200 or 212 or 216 unconfirmed number of deals that all of you have been involved, either directly or indirectly, which itself is a fantastic news. And this program was actually aimed to graduate all of you to becoming lead investors. All of you did follow, or some of you were already lead, but you kind of sharpened your skills over here. So again, congrats. We are starting the 4th cohort in about a couple of weeks' time. So we want Tarek, Jayesh Bhai as we call him, more about him. He himself loves to tell his story and then like that. I would also like to acknowledge Mr. Dinkar Suri over here. Most of you may not know, but he's the actual co-founder of the Thai Academy. So he's the one who, started this whole thing, and then, we also actually did pretty much a lot of programs where we actually educate entrepreneurs, especially aspirational and first-time entrepreneurs, on what it is. A lot of them don't come with a formal MBA or a management kind of a education, but this was, I think, about a 10-weekend program, if I'm not mistaken, at IIT Bombay, 55 hours. And we also, we couldn't do this, but we also took people to campus visits, and that's when we took them to meet Anupam Mittal in Tarve and stuff. So it was very interesting. And what we do in that program is that, it's lecturers who come and give lecture, but we call founders to kind of come and talk about and talk to their experiences. So the agenda for the day is, first is a fireside chat. Then, of course, we will have the formal part where we're going to give all of you your certificates and things. There is going to be an oath taking, and once you take the oath, there is no going back on it. We hold you responsible for that. And once the distribution of certificates is done, we're opening up the mixer. There is drinks and snacks being served. Please do stay back and network. I think a lot of you are meeting for the first time. So having said that, let me welcome Yagnesh, who is going to be our moderator for the day, and he's going to have a fireside chat. And again, folks, now you're pretty much visible over here. Please raise your hands again and ask your questions. I will give them first 20 minutes to talk, and then we'll do the Q&A. Over to you.
Hi, thanks guys. Thanks Thai Mumbai for doing this. Lovely to see you guys personally attending this session and looking all nice and good in the black robes. So just kicking off, I'd like to introduce today's panelist. Of course, everyone knows about Sanjay. We've all already met him. Jayesh Bhai, I think we all know who he is, founder of Sony, has been the managing partner at Jungle Ventures, now senior advisor there. Is now a managing partner of Good Startup, his own venture fund, which invests into protein-based alternatives. I'll in fact let Jayesh Bhai talk a bit more about himself and all the things that he has done. He's also written a wonderful book that you all must read, and we'll come to that. But yeah, just kicking off this, Jayesh Bhai and Sanjay, thank you so much for doing this. This first question on, since we are all investors here and graduating, some of them are already investing in startups. Would like to start with you, Jayesh Bhai. How do you find the recent developments on the Indian startup ecosystem? You keep traveling the world, you keep looking at various ventures, including Indian startups, and of course, I'm sure overseas startups. So, what's the difference between Indian startups, overseas startups? Anything that you find peculiar, worth sharing, that our investors can take home?
Sure. Thank you so much. First of all, Kai, for inviting me, and to Sanjay, Naveen, Agnesh. Such a pleasure to be here. I didn't quite know about this program. I knew this was happening, and they asked me to come here today, but I was just absolutely impressed in terms of what this is all about. The Indian entrepreneurship ecosystem is just booming, and if you roll back about 10 years and you think back and look back, right, it was very nascent. The venture capital industry was just starting. There were a few. Sequoia was there, Axel was there. You might know all of these names. Are you able to hear me? I think the mic is going in and out.
Fine.
So I think the sense was that entrepreneurship, venture capital funds, startups, this is all Silicon Valley. And to a small extent, 10 years ago, Singapore got started. So Southeast Asia, Singapore became a hub. A lot of money came to Singapore and venture capital fund. India was there, but what did India do? Well, services, right? So it was basically services oriented. ARPU, people wanted to know, how can I just make money? P&L. There was brick and mortar, things like that. And now you fast forward, it's just a complete sea change. I mean, it's just blown people over. Nobody expected this kind of stuff. People throw some numbers around, but that's just very beginning. I mean, people get excited about 42 unicorns or 48 unicorns. I can't keep up with the numbers. But that's nothing. The unicorns and what's coming down the pipe, and that's sort of tier one. Then you start digging a little bit further and you say that what's happening in the mini metros, and it is mind-boggling. So as I travel around, I went to Baroda recently, and Gujarat is for banyas and traders. That's what I think, right, about them. But so Ahmedabad has a different culture. Baroda has a different culture. MS University is there, and the kind of ecosystem that is building, and the kind of startups that are starting to happen. Again, what we have in Bombay, Delhi, Bangalore is maturity, experience. We've seen people come through before. They're on their second startup, third startups in many cases. People have worked in venture capital funds. But these smaller cities, they have no reverence, right? I mean, they don't have any background or nothing. People are just going, what are you doing? And they're trying to solve a lofty problem. And it is daunting. When I look at it, I say, I look at a kid, 25-year-old, and he's trying to build something and he's got no fear. And I say, "Paisa kahan se aayega?" He said, "Sir, aaj ka to aa jata hai. Kahin to mil jayega." So I think the point is that they're looking to you, obviously, and they're looking to also people who are, I'd say, naive. Because the smart people are investing in smart entrepreneurs who've been there, done that. There's a signaling that happens, right? Okay, this guy's come out of IIT, he has done a startup, he's failed or succeeded, IIM, all of this stuff. But the other folks, right, who have nothing to do. And they are looking forward to folks like you to say that, hey, can I get a second-tier city, second-tier entrepreneur, second-tier investing? And can that combination work? And I said, absolutely. In a country like India, it works. Because the number of problems that we have to solve, especially in the digital world, I just am totally convinced that there's a compelling reason for all of us to come together. We should talk about that a little bit more, but I'll let you ask me the next question.
Sure. Thanks, Sanjay. That's actually very useful. Coming to you, Sanjay, we all know you very well. But very few people know the exact journey that he's gone through, right? He may not have spoken too much in detail in his master classes, but now is the time we can actually catch him and find out how did this all start? Why did he really start investing in startups? As you guys would have already started at some point. He did his own journey entrepreneurial, and then how was it way back, Sanjay? Because even I don't know this, I'm sure. We would like to hear how did you really figure out startups as an asset class, and how did it all happen in your journey?
Happy to share. Thank you, Time Mumbai. This is overwhelming. I would not have expected all this stuff and meeting all the students who called in terms of as an investor, and it's just amazing and overwhelming seeing all of you guys in person. Kuntal, Vivek, amazing stuff. Thank you guys for making it. And special thanks to Jayesh Bhai. He has been having a foresight as an investor, building companies, and always been blessed to have him as a friend and somebody whom you can look upon all the time. He's very humble, but consider him one of the sharpest brains in the industry. If you can rub shoulders, like it. Very, very approachable guy. When I started my journey as an investor, he was one of the person whom you would look upon. So thank you, Jayesh Bhai, for making it for today. And to my journey, right, this is as I mentioned, startup world is filled with randomness, right? That it's all I mean, for me, nothing was designed saying that a VC banna. That's not the journey. When you finish engineering, that's what you start. Built a software company, worked across a bespoke software company, then had a dot-com boom, started a dot-com venture, lost all the money what I had, and it was so bad kind of stuff. And that's where I realized working with VC was so tough, because I got a term sheet in December, of 2019. By the time February 2000, the dot-com crash happened and they reduced the term sheet. Everything went crashing. I had a team to pay, salaries, and it was a roller coaster. But I always need to build something new, had that urge to build a product company. That was acquired by US-based company, first exit, first capital, built across personally kind of stuff. Then started another software company, built that, exited. In that period, got connected to Harish Bhai, who's the founder of NASDAQ. He's my mentor, guru kind of stuff. He pulled me into angel investing, saying that you have product knowledge, you know how to do product engineering. Join, we are all financial investors, it will be day to day. He actually recommended me to become a member at Indian Angel Investing. That's where journey started. I enjoyed that whole process. Became a full-time angel investor, and then saw gaps and 100x VC started. That journey is going to a next level now, and blessed to have a lot of friends and people like Jayesh Bhai, Harish Bhai. Right?
That's fascinating, Sanjay. Coming to the next question, was always curious about this, and we've also tried to discover that in our own journeys. Jayesh Bhai, you first and then Sanjay. In startups, when you look at your investing journey, and now in India, again in startups, various stages, you already mentioned about a few of them. What strikes you most when you meet somebody, like when you meet a founder somewhere in the restaurant or somewhere in a meeting pitching to you? What are those 2-3 things on top? I know we look at a lot of stuff, but what really kind of strikes you the most in founders? And that would be very useful for our audience here, Jayesh Bhai.
And I think that's a good starting point, because a lot of people ask me, what do I look at when I invest? And there are 4 questions essentially I ask, right? So it's who, what, how, and why. Right? So who is the most important thing? And who is the person, who's the founder, who's the team? If that doesn't pass through the filter, basically I'm out. And so therefore that first question, and we can talk about the rest of the questions later on. But I think the who is the signaling. Who is the signaling which is saying, does the person articulate the story well? Is the communication skills good? Does the person have and you're trying to figure this out very quickly, right? You're going to meet that founder once for the first time for 1 hour, and you've got to make a call. Are we going to continue to kick the tires, or are we done? You could have a team who met him or her and then filtered through it. But when I'm meeting the founder, I'm looking into his or her eye and trying to find that out. Saying, is this a system 1 or a system 2 person, right? And so if you haven't read it, you think fast and slow. Which essentially talks about system 1, system 2. System 1 is your gut feel, and system 2 is analysis, actually doing deep diving into the data and analysis. And many decision makers actually figure it out that average is 65-66% of the time your system 1 is more accurate and correct than system 2. And so therein lies your first thing about the who. And the who is, of course, like one thing is, first, can they tell you the story, right? What is this big product that they're trying to make? Is the product useful, right? Is the product or the service that they're making, is it useful? But if the team is good and the story is not completely there, I'm still okay with it, because I feel good about it, saying, you know what? And of course, the ability to listen. So if the person is listening, is the person amenable? If it's a very hard-headed person, it feels like they don't have a emerging strategy, I call it. So there's a deliberate strategy and an emerging strategy. And people just get stuck on the deliberate strategy. But you must have an emerging strategy where saying, things are not working out exactly the way I wanted it to, which never does in a startup, 99% of them. And so are they amenable to taking guidance and all of that? Recognize also the second point, which is the decision-making power. See, the decision-making, understanding 360 degree is phenomenally important, because if you put a problem in front of an investor or an academician or another entrepreneur or a professor or an executive from a senior executive from a company, invariably they will have 2 or 3 diverse answers. Now that, founder has to look at that and now make a decision. He's got to take one of those paths and he's going to go forward. I think it's extremely important. I look at that decision-making ability as well. And does he or she have a 360-degree view? So these are sort of some of the basic things that I'm looking for in the first pass of the who.
Yeah, well, I think that just reminded me of a line from this book called Good to Great. It's always good to have the team first, and then get the right people on the bus, and then the right people on the bus figure out where to take the bus. I think that's what essentially what Jayesh Bhai actually meant. Coming to you, Sanjay, wanted to ask you 2 things. Like 2 things that probably turn you off when a founder is pitching to you or talking to you or multiple interactions. Where at which point you really have made a decision saying, I don't want to really do this? Or what are those 2 things that made you in favor of that decision? So what were those couple of things we really would like to look at and ask you that?
Sure. On putting off kind of stuff, founders who do not do their research, right? Let's say, for example, a founder is coming and pitching to me, and then is asking me the question like that: what's your check size? How do you close? What's your fund size? Everything is there on my website. And the guy has not done any homework. He's quite a put out. You want founders who have done their work about whom they are pitching across, which means they are doing random spray and pray kind of stuff, right? Whatever works across. So they are not looking for me as a value add, saying that I want to take money from 100x kind of stuff. So if that is not the case, then my evaluation parameters are very different. Second is entitlement. You can see founders who come with that entitlement, saying that I've done my hard work. You can't reject me. Right? They are unable to. When you question their hypothesis, you question their the belief, they suddenly feel shaken up. So again, a bit of kind of things which I would love to or in favor is when I get educated, right? When somebody can give me a vision of future, saying that this is how world will look like and this is where we will be working on. Quite exciting to meet them again, kind of understand. And second is that that energy, right? Contagious enthusiasm as a founder. If a founder is dull, not happening, not going to engage kind of stuff. So when you meet somebody in person, you get a vibe, you want to engage. I have a lot of founders whom I've worked across and spent time where I have not invested in. But they are good people, you want to engage with them, you engage and work across.
I think very aptly put. I always wanted to put those, our fingers on those 2 things that put you off and 2 things that actually tilt the scales in favor of your decision. Because everything else is pretty much there, right? What is not there is what I think Sanjay just mentioned. Thanks for that, Sanjay. And coming to you, Jayesh Bhai, one question that I have now in my mind is, after having such a fantabulous journey, having been an investor at Jungle Ventures, actually started the whole, Tony Entertainment in India, and that's something that is, it's an inspiring story. I'm sure some of you guys in the mixer will want to know more about that. But how did this whole Good Startup came about? How did you think about this whole startup and in investing into the alternative protein space? Can you just talk a little bit more about that, and we would like to know what's the thesis and why this and what kind of startups are you looking in this space?
So first thing is, I just want to lay out that I came from a very humble beginning. So when you come from a humble beginning, I didn't have an understanding of money to begin with. So that's one of the reasons he just made a passing of a book that I haven't written a book, I've compiled a book, which is What Shall We Do With All This Money? And it doesn't matter how much money that is. What shall we do with this money? Is whatever extra you have over and above what you need. And therefore I get impressed by people, not by how much they've accumulated, but how they utilize their money. There's just a site to give you some background of where I come from, because sometimes people just get blown away by hearing these, big titles of founder of Sony Entertainment Television, which is fine. So, and just to back up also on that journey, so I grew up in Calcutta, went to MS University, Baroda. I actually got into IIT Kharagpur for metallurgy, so I dropped out of there and I went to MS University because I wanted to do electrical engineering. Back then I had no clue why, but also I did some research, Sanjay bhai, and there were 23,000 students in MS University, 52% women and 48% males.
Wow.
So yeah, so that was very good. So I had an amazing
In engineering, getting so much.
There you go. So MS University, and then I got into IIM Calcutta, and again there, and I went to IIM for 2 trimesters, and I bounced, and I went to University of Texas at Austin, and I wanted to just have adventure. Let's go out. My brother had to send me a ticket. Typical immigrant story. Went to work for IBM, and now the part that you asked me, Rajneesh, is I really am very blessed because I'm a catalyst. The thing that I do is that when I see something, my system one kicks in. And so when an opportunity comes to you, you can do analysis paralysis and sometimes wave off on it. And fortunately, I've been incredibly lucky, and I got a role as a catalyst, really. So when IBM was not in India, right, for 10 years, and I was sitting in IBM in Houston, and they were trying to put 4 teams together, and they asked me if I would, pitch in and help us start India as a country. I said I've never worked in India, and I don't want them to go and live in India. And they said, no, this is in a place called Singapore. So that's how I ended up in Singapore. And so they moved me to Singapore. We sold from Singapore to India, and we were 4 teams. And over a period of 4 years, we sold more from Singapore than any other IT company in India. And so then IBM decided to move to India. So that's again a catalyst role number 1. Very small role, which brought IBM to India. Today, IBM's largest headcount in the world is in India, right? And so this happened sort of way back when. At the end of that, they asked me to go to Bangalore, and I couldn't see myself living with my kids in Bangalore, so I quit IBM. 12.5 years later, I quit IBM, and I decided to live in Singapore. I gave up my US citizenship and became a Singapore citizen. So I was on my 3rd citizenship by then. At that point in time, I came across this one friend of mine who said, hey, I'm starting this project to bring a television channel into India. Again, did some research. Back then there was no Google where I could just figure it out very quickly. So I spoke to a lot of friends, I figured it out. I went back to the guy and said, you know what, this is a massive opportunity, because there was Doordarshan, and then there was the ZTV, and that was the only one. Cable and satellite television channel. I said, in America there are 29 cable and satellite channels. Here we have only 1. Right? I mean, now of course there are thousands, and there are hundreds and thousands over everywhere in the world. But that epiphany happened, and again I played a catalytic role. So us founders did a joint venture with Sony Pictures Entertainment, which is Columbia TriStar, and we started from scratch, and it was a cable and satellite channel that launched out of Singapore. So the uplink is in Singapore. All the obviously production, everything happens in India. That's how we got started from a very small place, humble place up here on Mira Road. That again catalytic journey ended with a exit where we sold our equity to Sony, but I'm proud to see today that there are a few 100 billion South Asian diaspora who all over the world are watching this entertainment channel. From the day we pushed it 24/7, it has never stopped, but the network has grown dramatically, including something that amazing is going to start today at 7:30 at Wankhede Stadium, started from our offices, right? And we're amazingly proud of it. So that entity has grown probably to $15-20 billion valuation, right? So I mean, I'm really again proud of that, played a small catalytic role. Third, then after that I tried to retire. So after Sony, I get an exit, first time in my life, binge traveled, went to do Vipassana meditation, which I did, I still do that. Then I went to do some seva, I went to the Gandhi Ashram and Mano Sadhana, I did all that service and all that, typical stuff, first time in the money. That whole journey lasted for 9 months. So I retired for 9 months, and at the end of it, my wife threw me out of the house and said, we'll go find something to do, but this is not working, both of us can't be sitting at home. So just the point there is that Jungle Ventures got started. There were 2 of my friends who I connected to them, I connected each other, and they went away, came back and asked me to become a general partner as well, saying, you know what, we need 2 people to be general partners, and so it's going to be one of these guys and you. And so I said, okay, as long as I don't have to go to the office every day, I'm okay to do that. And that's how the journey of Jungle Ventures started. Again, a catalytic road where I connected the 2 founders. I was a managing partner in Fund 1 and 2. Fund 3, I became a senior advisor now. And now they're on Fund 4. Collectively, I think they're about to announce their 4th fund, so I'm not going to give out the numbers, but total AUM is about $750 million. right? Based out of Singapore, invest in Southeast Asia, including India. Already some amazing unicorns, including Mooglix and LiveSpace and Predivo, etc. That point in time, I said, okay, I'm done. They wanted to give me more board seats and all of that, so that was my second attempt to retire. So this is a long-winded story to come to your answer now, which is saying, hey, how did this happen? So I retired a second time. COVID happened. I had nothing to do, completely blanked out. I support a non-profit called Akhand Jyoti Eye Hospital in Bihar, which does 65,000 cataract operations every year, and I'm helping them with fundraising, and I'm on the advisory board. But other than that, I had nothing to do. So during COVID, on Zoom, I learned karaoke singing. So I'm not going to do it now, but maybe after a few drinks, if you come around. In 1 year, I just absolutely got passionate about it, and I learned karaoke singing. And then a friend of mine, whom I met at a Thai charter member retreat, Gautam Godwani, whom Naveen you know, and you probably know Anil Godwani, two very famous guys who have exited a couple of businesses. Gautam and I had met at a Thai charter member retreat. And you guys should think about becoming a Thai charter member. Figure out some of these things that Naveen is doing. He called me from San Francisco and he says, hey, listen, I've been in animal welfare for 3 years and I've been in San Francisco. I'm single. I want to move to Singapore. I said, okay, come on down. He came to Singapore. We both talked about this thesis of his. He was trying to save the animals from the food chain. Simple one-line thesis. So let's save the animals from the food chain. So I said, okay, what's the deal? What's the deal here? He says, listen, we just don't have that much protein, right? Whether it's meat, seafood, chicken, dairy, eggs, we just don't have enough protein here by the time 2050 rolls up. So I listened to him and I basically figured out now that this whole alt protein where the meat substitute is not just the gluten and the plants, but also there's a plant-based, cell-based and fermentation, right? So there are 3 technologies that are in play here. And so climate basically can't handle it. There's not enough arable land. There is not enough water that can sustain and grow as much protein that is required by 2050. 10 billion people, and when you look at the amount of protein that you need to make just for the people, current existing consumers of meat, chicken and seafood, but now the middle class, right, which is in India 200, 300 million people, but all over the world, they're all aspirational, right? They're maybe eating once a week and now they want to eat twice a week. Can you imagine the massive numbers that are going to be required? And that's what started this thing. But the other piece of it is the factory farming. So the animals have just, been raised in a factory, incredibly bad situation, contaminants, antibiotics. 80% of the world's antibiotics are pumped into animals, essentially. Nobody knows about it. So that really moved me. And so collectively, the two of us, we came together and I came out of my retirement for the second time. And we started a venture capital fund. It's called Good Protein Fund. We're based out of Singapore. We invest all over the world in startups and companies, multi-stage, and only in alternative protein. Very, very focused. So plant-based, cell-based, and recombinant, which is fermentation, and pet foods, and also materials. So we invest in leather, substitute, silk, food. So that's, sorry about that being so long-winded.
Absolutely.
That tells right why I was so excited to have him. And he is seen so much, right? So much to learn from.
Yeah, I was about to say that Jayesh bhai, whenever he now announces retirement, now you know something more exciting is coming up. So wait for that next big announcement.
Thank you. But I mean, that's the catalytic part of it, right? See how it comes, right? And I'm just a catalyst. I'm not going to save the animal kingdom, obviously. I just play my little role and somehow I get these amazing, amazing people, brilliant guys who come up and who do the heavy lifting.
Absolutely. Wanted to go back to Sanjay. Always been wanting to know about this, and I'm sure a lot of you guys also want to know stories about the unicorns that you funded. How did you really plan? Did you really plan an exit? Oyo, etc. I mean, CoinDCX still on your portfolio. What are the thoughts on exit? Because I'm sure all of us want to know that after having invested, the next big question is exit कब करना है और क्या कैसे करना है. So, I mean, do you really plan it? Does it happen? How does it happen in your case? What has been the experience? I think some learnings would be very useful here.
So, as I always say, it's all by luck. Sometimes you get pushed out of cap table by the big boys, and sometimes you play a role in terms of influencing an outcome. So, both the things work across, but the primary thing which I think I've learned across is to be in a good books with founders, right? Becoming a good VC. you start, I mean, I write first checks, and that's where I enjoy my journey to discover a startup, right? And it's all about building that company, and you have seen them very early. So how do you be a good partner as a shadow co-founder in their early days? I think that goes a long way for me. And most of the time, I take insights and input from the founder itself, saying that, what do you think? Should I be exiting, kind of stuff. So that is one data point. Secondly, if my founder relationships are not great, and that happens in many cases, kind of where over the time founders lose humility when they reach to that unicorn stage, and then suddenly you are no longer interested. It becomes like a money game. Then I would like to go out of the cap table. There's lesser belief with the founder and the company. I would like to go out of the cap table. Just not interested to play that money doubling kind of game. That's enough portfolio in the whole working enough companies in the portfolio. Lastly, the way I see across is, do I want to double down on this company? So let's say you have got 5 crore on the table as an exit value. Would I want to invest that 5 crore again? Right? This is a cash available, which I didn't take an exit. Is it something which I would like to take? So those are a couple of ways. But there is no formula. Exits are arbitrary in startup world. I don't think so anybody can design an exit kind of. You can try to work with the founders towards an exit, but exits are arbitrary.
Now, I have the benefit of, we work closely on Underdex, and I have seen Sanjay taking those calls. Very important, guys, at this point when you are investing, it's very important for you to have a touch point with the founders, which eventually plays a very big role in your exit whenever it takes place. I think that's very important. At this point, I would just like to kind of stop and ask from the audience if there's any questions you have in mind on so far what we've discussed. Anyone of you? To any one of us, Sanjay, Jayesh, or here.
If I may, first of all, this is really very insightful. As I've read a lot about, talented people like you. It's not just, there are a lot of errors of omission rather than commission. There's certain things which you have missed out. Any learnings from that, anything good which you believe in hindsight was not just good but excellent, but you missed out. And why? Any lessons for us from that?
I've got a huge NT portfolio. Right? I would, because first check, 20,000 odd deals a year. So virtually seeing almost every other deal which is getting funded. But couple of things, like for example, in a company called WizRocket, which is now CleverTap, one founder was going to be in India, one founder was in US. Distributed teams, 2014-15, nahi chalega, right? So, you need to be at one location, miss the whole bus. Today, they are like unicorns, becoming towards a unicorn. Nothing is more expensive than a lost opportunity. So, many NT portfolios, over the time you refine your learnings, saying that, there are some places where you believe, let's say, single founder company, nahi chalega, there is a bias, right? So, always you learn from those biases, right? And then you correct yourself. For us, I think VC industry is like forever apprentice, right? You keep on learning. There's no stopping. If you lose your curiosity about learning, then I think it's an end.
Jayesh, your thought?
I'd say that right on early, I bought Bitcoin for $2,950. And I was a massive crypto fan. I'm still a blockchain fan. And I didn't have much understanding of it, and I just was fascinated by it. But when it hit 10,000, I said, oh my God, I'm 3x. So I bailed. Right, so there it is. I think back then, when I look at crypto and blockchain, I think the first wave I missed. Now I'm catching the second wave. Am I a believer on Bitcoin? I'm not. I still think it's a sector. But does blockchain have space and etc.? So that's just one area where I'm studying more into it, and there's nothing to study as much as in blockchain there is. And the second is cannabis. So I missed this the first wave of cannabis. But now I'm coming into the cannabis funds and blockchain funds. So again, second round, not so bad. It's like internet first round, if you miss, actually it was fine, right? But if you miss the second and the third and you never believed in internet even till today. So my take would be going forward, look at 3 times 3 metrics. So one is crypto blockchain, I think is important, fintech, so therefore that second is cannabis. But third is digital, right? So I mean just digital in general, right? I mean, if you look at India and you look at the digital penetration on anything and everything that India is doing, I think if you just close your eyes and you just see that is that thing touching anything to do with digital, and is that improving the efficiency of anything and everything, I think you'll make huge amounts of money. So that's the one side of the metric. The other side of the metrics is cash flow, data flow, and user flow. Just look at those 3 things, or an intersection of those, and I think therein lies the answer. But again, missed out. First wave of both cannabis and blockchain crypto, I missed out.
One anecdote which I would like to share. So I've got my brother here, Arshal. He's based out of LA. He runs a fund called 2MVC, invest only in India, US-based fund. In early days of crypto, I have 2 unicorns in crypto. They have great exposure. Still hold quite a lot of significant exposure in crypto. Then cannabis. I was in LA with them and saying that let's start a cannabis fund. They were saying that, let me take a lead to it. So we were discussing with the family. With crypto, cannabis, what kind of family you are becoming? Actually, crypto was like looked down upon. Saying that, kya kar rahe hain? We actually moved out of crypto. In fact, there was a period if somebody was there on the LinkedIn, I had mentioned investing in cannabis startup, right? And we updated that and then just repeated back kind of. So many times, there are opportunities you see and then you say, not doing it.
Well, that I think very interesting stories came out because of your question, and thanks for that. We have these 2 prolific investors with us. We can't let them go without asking what are your favorite sectors. I know Jayesh is very much into protein-based alternatives, but apart from that, Sanjay, first, any specific themes you like for 2022 that people should focus on, and then afterwards, Jayesh.
I think I believe there is a large opportunity just in the future of work because things are going to be hybrid, things are going to change. Business in digital health is big time growing kind of stuff. Next is home economy. Anything which you can service at home, kind of home economy was never existing now. You can see home economy. I think I would say digital health, home economy and future of work. These 3 would be a top priority.
Jayesh, your picks, your themes.
So again, I would say that keep an eye out on digital in general, but I'd say health tech is massive. Edutech is already playing off there. I think food and tech, I think, is my next wave that I'm seeing. Again, I think that maybe alt protein is too early in India, but if you get an opportunity to look at it outside India, you'll be thinking about this day 5 years and 10 years from now, just as you were thinking about internet in 1995, and you wondered what that internet is all about. There's a massive mismatch between opportunity and capital. So I'd say food tech also.
Yeah, I think I have already taken a leaf out of this, and in fact, we've already announced our class 7 pitch day dates. We have one, Jayesh bhai, on plant-based milk, and I'm sure you'll be interested in that, and all of you as well. Taking a cue out of that, I think we caught it recently and have already invested as part of our class 7. We all should watch out on the pitch day, and we'll talk more about that. But yeah, I think I'm gonna wait for Naveen. I think, are we out of time or do we have some time for any more questions, guys? Yeah, I think there. Can just have
Can you just pass this to him? So first of all, thank you so much for sharing wonderful insights. I completely echo with what you shared, and very impressive. I'm glad that I could travel from Delhi. I was supposed to miss this, but then I said no. It's a unique opportunity, and really happy to meet you, sir. And of course, Sanjay has been a mentor to us for a long time now. So I would like to ask you. Valuation is a science and art, right? You know that. but I feel that the success of any deal is dependent upon how exit you do, right? How much can actually be science factored in the exit and how much art based on how many exits you have taken from your personal experience? I think that would be very helpful, because I feel some of it cannot be engineered, whereas valuations can be and investment can be, based on my personal experience.
Hi. I think Sanjay will be a better person to answer this, but just my limited point of view. I think there's a gentleman in the back. Why don't we give him a chance first? I just want to say that, again, that also is an art and a science. Instagram got sold for 1 billion. Was it too early, too late? WhatsApp got sold for 19 billion. Was it right place, right time? Think about it, right? And Yahoo, at one point in time, there was a massive offer on it and they didn't take it. And then they had to sell off. So what is the right time? Right? I think no difference in when you buy equity. Are you buying it on the way up or the way down, etc. Also, is there a buyer and a seller? I think that's the important thing, right? If there's a huge interest from a buyer, you can push up that valuation at that point in time. But that assumes, is there energy in the team? Right? Has it exhausted? So it depends also on where they are in the growth. Not only of the growth of the company, but the growth of that particular industry or the problem that they're trying to solve. And I think it's an intersection of all of those things together. If the founder is young and wants to keep putting energy, whether the founder is already hitting 50 and saying, you know what, I'm getting a 1 billion, 500 million exit, what am I going to do with this money? But I'll let Sanjay answer.
Sanjay, your thoughts?
I mean, let me give an analogy. Like all of us value gold, right? It's a metal. Why do we value gold? Because all of us have believed over centuries that's valuable, right? And suddenly it's a supply demand, so many factors come at play, and many of the startups, right, while they have they do not have those performance metrics which are required across to prove their valuation. Most of the startup investors are funding based on hope. We are a hope investor. That's where the valuations are created. Few will be momentum driven, few will be based on some thesis which an investor will do across. But again, for as a venture investor, I have a simple philosophy. You enter at a valuation, you exit at a valuation. Price per share matters.
The gentleman over there.
Thank you. So my question is to Jayashree. So I think you mentioned about system 1 and system 2. So you told that 63% of the decisions are made out of system 1, right? So we are in an age, where we are very time crunched, and we talk about elevator pitch, we talk about 1 hour communication things and all. So there's all system 1 thinking. What if we miss on a bus? Like there can be a personal bias, like what Sanjay told. So I feel there's a lot of system 1 being played out and not system 2 emphasis given on. What do you think about that? Because I truly relate with thinking fast and slow, and we tend to use more of system 1 in a lot of places, but we are not aware of it.
So angel investing actually uses a lot more of system 1. Venture capital uses a lot more of system 2. There's an investment team, there are investment analysts, and they crunch data. The amount of research that they do on competition and unit pricing and how much funding do they need, will this burn be enough, is the team there, etc. So there is a lot of data crunching that actually happens behind the scene. And then the investment committee takes that information and applies their system 1 on top of it. But angel investors, absolutely. If you are full-time into something and you're not investing because you're taking the debt, then you're missing out on many opportunities. So the FOMO kicks in. But then I think, what? If Sanjay Mehta is investing in this, he has done some due diligence. I don't have the time. I'm going to follow him. There's nothing wrong with that system 1 here.
The way to look upon is, you were not part of my class, right?
No,
He's my colleague.
Oh, okay.
So,
So I think here is, as I mentioned in my class, minimum 20 companies. If you are doing 1 or 2 companies, it's like buying lottery. You can't do deals. Nobody knows how to pick winners. Nobody knows. If you tell me I know how to pick winners, no. So minimum 20 needs to preserve capital. If you want great returns, go beyond 20, which means over 3, 5, 7 years, build a portfolio of 50, 70, 100 companies. That's how you create returns.
It's all about portfolio construction. We probably wanted to talk more about it if we have time. Yeah, you please.
We see now India.
Just give it 1 second. Just bring it up forward so that people at the back can hear the question.
No, first of all, thank you. I think it's a great evening, and I will remember this for time to come. Thank you for your time, and thank you, Ty, for organizing this. I'm new in angel investment and life of the strategies. I see a very good virtuous cycle in my view, especially when India is concerned. The startup ecosystem is getting the desired support, not only from investors, but also from government and every corner, every stakeholder. But future is uncertain, and we would not know what future holds for the prospect of startup ecosystem. So as an investor, what are those signs which I should look out for, which would suggest, hey, there's something wrong, there's a big roadblock, you hang on, let things stabilize, and maybe it is some time in future you should revisit the opportunity in startup sector.
So I'll just answer this in one way, that this is a test match. It's not a T20. It's not an ODI. And when it's a test match, it'll go through ups and downs. Right? So you can't keep hanging on to it. You can't keep saying every time there's an up cycle I'm going to invest. Every time there is a down cycle you should also invest, because valuations are going to stabilize also. So my take is, if you listen to what he said about doing 20 companies, 30 companies, 40 companies, you can't time them. Because a good company comes and goes. So if it was Flipkart and it was right upon you, you can't say what the macroeconomic opportunity is. No. You got to go into it because you really believe in their founders and you believe in the thesis, and you feel that yes, in 2 years, 3 years, 5 years, these guys will make it happen. And that's what I would really look at. Sajay.
No, I really agree upon. Idea is startup investing is illiquid asset class. So volatility तो कुछ है ही नहीं. पैसा डाल दिया, then only you work across with the founder to help them raise the next round of funding. What more? There is no volatility. There are no cycles. If the founder is able to raise the next round of funding with basis on their performance, basis on your help with their introductions to various VCs, you are influencing an outcome. That's the only thing which you can do as an investor. There is hardly anything. There is no volatility. You just invest, build the company, take it to the next level, take it to the next level. At some opportune time, there will be an exit offer, and you entry and exit, right? That's how startup world is all about. Right? It's an illiquid asset class. There is no volatility in that sense. And you need to be part of every vintage. There's a fintech boom, you played that out. EdTech boom, you had some in the portfolio. Agri-tech, you had some in the portfolio. Right? As Yagnesh mentioned, I didn't have anything. We didn't believe in the thesis of alternative protein plant. We got ourselves educated. We had a huge paper and internal sessions on how this whole market will play out. And we ended up investing in first company. We'll do more in terms of discovering and working hard to get the first plant-based milk or plant-based meat, or find those companies in that space. So you need to be ahead of the time when the market is just starting. We can see these markets will grow and are set to explode and become big. If you enter at the right time, very early, definitely there is a story. Today, if somebody is going to come and say that, okay, I'm going to build the next Flipkart, nobody is going to fund it. It's already, the e-commerce market has played out. What's a new thing over there?
I think in early stage, as both of them mentioned, it's not about the macroeconomics, it's about the opportunity at hand. The gentleman at the back, please. Yellow shirt. Yes, that's right.
Yes. First of all, thank you so much for answering our queries. I'm from Ahmedabad. My name is Saket, is Abhimanyu. We are attending the course, so we are not graduated yet. Start from it. But my query is that we are part of an organization who has just set up the angel fund, the VC Cat 1. We were part of from the initial work process till the finalization. We just submitted 1 week before. We have to queries from the SEBI as well. We were early employed. We are early employees. We don't have too much. We do have financial analysis background. Now we are in the process of setting up an initial team of deal scouting, learning more about this, which is why this course and all. Would you help us? Is it possible that you could also help us, understand more as to how to find good deals? How to, we have a huge Twitter audience as well. We have mailing lists. We help the founders. Sometimes we invested in a coffee company. We have cafes and all. We also help them, scale by giving them media presence. We mentioned in our mailing list so that they get good audience, good, on those sides. But how to build a good deal flow, good companies. Possibly, if you could invest next time, you could also help us understand on those companies where we could also invest our clients' money. Is that possible? Could you please, since you already started a couple of years before, how did you, find out the deal flow? That is.
Yeah, so for me, before 100x VC, already had 10 years of investing journey. So over 100 plus companies portfolio. So enough proof to say that I'm a genuine good VC. So deal flow was never a challenge. When we started 100x VC, deals actually flew in kind of. Averagely, as I mentioned, we see 20,000 plus deal every year. So, but in the course, we have a specific session in terms of how to create deal flow and what are the ways to work so that you are quickly able to close a deal. Like for example, if there is a inbound deal flow and you get, let's say, 10,000 deals, you will hardly be able to meet maybe 100 or 200 people in that, which will be genuine. A lot of things will be crap and you will just. Then there are investment bankers who will refer to deals. But you take it with a pinch of salt because there is a conflict over there. And lastly, there is a recommended deal, which means that, so for example, in 100x, when I invest into any deal, there is no fee, nothing, right? I just say that I will funded this deal. If anybody wants to join the capital, will come over. There is no, I make money only when there is an exit. This is like, then you have, it's a credible deal. Because I have already put my money. I'm saying that this is I have put my money. If you want to join the capital, please raise. So you need to find, see, this whole course, the reason why I started was how to create more lead investors. Right? If you are leading a deal, the other group members want to join, nothing like it. Right? You will get so many other angel investors. And that's how Indian Angel worked across. Right? Indian Angel Network grew because there were solid leads. I used to be a lead investor. My deals used to get subscribed in less than 5 minutes. In fact, the fastest swinger hota. Right? I mean, people used to, I have a mail from Chris Gopal Krishnan, this Infosys का co-founder line में खड़ा है कि deal नहीं मिल रहा. I mean, that's the level where you work hard, becoming a lead investor, people will follow you. मेरे को काम नहीं करना है, पैसा ही देना है. What more? Right? And enjoy the returns.
So just to add, if so initially you used to invest in a lot of companies and also help them. That is why the founders started coming back to you.
Yeah, absolutely. I used to that was my full-time role, right? I was like full-time angel investor. I used to work with the company as a like shadow co-founder and be on the company like consistently selling them. Right? Selling is the biggest part what any company requires.
Maybe just a quick point, I don't think this works. That's okay.
So there are 4 levels, right? So first level is the smart investor. They can add incredible value. They are very smart. They are very well-known, charismatic people like Sanjay, and they have money. So that people come massive 20,000 deals. And the next tier are people. Okay, they have money. They are smart, but they have money. But yes, still those people who are A don't invest in it. Then they go to the B, and then the C. So the last person standing is the person who has money. Everybody has said no, but you still have money. So let me go to you. That's how you start. But then you go up the rung. Then you become one of the smartest people like Sanjay Mehta.
That was very well put. Yes, Naveen.
Thank you, sir.
We'll wrap up the session now, please.
Thank you, sir.
Thank you. So folks, as Ty, let me also add something to this question. We are privy to a lot of industry news and gossip, and founders come and talk to us. if there's one thing why this man has become reputable, is founders who have crashed. He has been amenable to them and he has said thank you. Come again next time, you will see. There's been no bad riddance of founders like that. So that 10 years of work is because of that. He'll not tell you that, but I'm telling you that. Okay, so now we move on to the actual formal part. I would like to do this very quickly, but before that, on behalf of all of you, and of course some of the lecturers who were part of this, we would like to kind of felicitate Sanjay himself. I think everything begins with the guru first. So just give me a minute. So on behalf of all of you, I'm presenting the citation to Sanjay. Okay. It says, as a beacon that emanates light, you have shed light on all our fellow investors. Thank you for showing us the new benchmarks to achieve and making us understand there is no compromise for excellence. TiE Mumbai salutes you, Sanjay Mehta, for his contribution to the investment ecosystem and taking us to great heights. Thank you. Okay, now we would like to quickly, show our appreciation to all the people who were part of, they were actually your lecturers. So starting with Vipul Mehta. Vipul bhai, please. It's a very narrow place and large people around here. So a lot of you still had questions. Please here, please catch it.
Thank you.
Of course, the iSafe Note Guru. Jayesh bhai.
Oh, thank you.
Of course, Sanjay. And the man who started it all, Mr. Dinkar Suri.
Oh.
Okay, so we'll just clear the chairs now. I'll invite all the red robes to come here. We'll go cohort 1, cohort 2, cohort 3. I will be quickly calling you by name. Please come from this side. Pick up your certificate. Everybody gets an individual photo for now. We are trying to do this within 30 seconds. And then most important part is when you pick up your certificate, it's by law that you have to wear the hat. And I'm not making this up. We had to read through the rules and regulations of a graduation ceremony. And then post that, please go back to your places for the $1 billion unicorn shot, which is we're going to throw this in the air. That is what I want, to hang on to that. So I would request Sanjay and Jayesh bhai to actually hand it out for short. Sorry guys, before that.
That's what I was doing.
No. There's actually an oath for which I expect you all to stand up, please, and place your right hand over your heart.
Sanjay bhai, this one. Your part is here.
Yeah, please. So folks, this is something that we as TiE Mumbai put together because, we want the good investors to go out of our ceremony gradually. We've got a lot of ones who are crazy out there, but we believe that folks graduating from our end will have very high standards. So please repeat after me. We are thankful for the knowledge,
We are thankful for the knowledge,
wisdom and opportunity bestowed upon us to become responsible global citizens and capital conscious investors. We pledge to be fair and ethical to all in our endeavors, dealings and transactions. I pledge to make wealth creation as my prime directive. I pledge to create value for all in our ecosystem, for founders, startups, fellow investors, professionals, institutions, and economy at large. I pledge to constantly learn, innovate, spread wisdom, and deliver upon my resources to the best of my abilities in helping build a progressive future. I pledge to transfer knowledge, educate, and build more fellow investors for the ecosystem, and thereby increasing the overall pie of the startup investments. And above all, I pledge to treat everyone with dignity, equitable status, with utmost human values at all times. Be it during success or during adversity. One more minute, and now for the declaration that Sanjay is going to best talk about.
I hereby declare all of you today as I hereby declare all of you today as graduated students, and I now bestow upon you with the designation from today you all shall be addressed as fellow lead investors. May the force of wealth be with you all forever and beyond. Congratulations. Thank you. Thank you.
Okay. You may all take your seats now. Cohort 1, let's start off with that. Ashwin? Gopal Krishnan? Cohort 2, Aditya? Ranga? Hiren? Kiran? Yes. Kiran. Pratik? Sachin? Mahajan? always enthusiastic Pariksha.
I will start.
Pariksha. Mr. Kamdar. By the way, this happens to be Salomi's dad now. Suraj. Roshan. Okay, now the most dreadful question. Did I miss anybody out? Oh yeah, please. Name?
Others.
Others from which court?
Go to.
Court. Let's check. Others? Okay, folks. I now request all of you to come here and stand up, please, for the $1 million unicorn shot.
एक second, wait, Insta.
Oh,
I have to make a reel.
yeah, put in Instagram.
Yeah.
Yeah.
Come closer, all of you.
There is so many people are.
बहुत सारे लोगों को आना है.
हाँ, I know.
Okay. You guys need a stool or something?
नहीं नहीं मैं पीछे जाऊँ.
मैं कहाँ से
हाँ.
How many takes? How many takes?
2 or 3. That's it. Okay, folks. Easy.
I can do it.
हाँ,
और सेम
3, 2.
करेंगे.
Okay.
Hold down.
It's okay. Throw the guest out.
Right?
Damages are not covered.
अभी आएगा.
Hold on.
Okay, guys.
Yeah.
3, 2, 1. Yay!
Nice.
Okay, congratulations everyone and thank you. We are starting the mixer. So you have beer in the.
Oh, this is
Yeah,
nice.
please, you know, it's quite warm actually. So we have beer over here and snacks are being served over there. Please do stay back and network. I'm sure all of you are hungry and thirsty. And folks, sorry, before you take out, feel free to come and take photographs with groups and your friends and all of that. Use the opportunity as well.
Tomorrow